Hey guys, welcome back to another episode. Today we're going to take a quick look at Netflix. They just reported earnings. The stock is down about 1.3%. And on today's episode, I want to take a quick look at 4 things that I thought were interesting about their earnings report. If this is your first time here, make sure to hit the thumbs up, make sure to hit the subscribe button, and check the pinned comment where I have 10 free stock ideas for you right now. So let's get started. But before we go, guys, I mean, it's been an amazing move on the market. My portfolio has just hit all-time highs, and I hope everybody else is doing super good. We have this kind of joke going around in this community that I created, that every time I go on vacation, the portfolio tends to go to new highs. So hopefully this continues. I have a few more days of vacation. Hopefully the market can keep going green. So like I mentioned, right, Netflix right now down about 1.3%. And let me know in the comments below, guys. Are you excited about Netflix right now, or are you excited about how the market is moving? Are any of you guys in all-time highs right now? If so, congratulations. If not, I hope you guys get there pretty soon. So the first thing I want to take a quick look at are just revenues and subscriber numbers for this company, right? So first, I want to take a quick look at their last earnings report to see what kind of revenue growth they were forecasting. So for Q3 of 2021, they were forecasting about 6.2% revenue growth in the last quarter, right? Now, if we take a look at their quarter, which was Q3 of 2021, they saw about 16.3% revenue growth, year-over-year growth. So they beat their expectations by a little bit. And we're going to see most of it is coming from their addition of paid subscribers. They thought that they were going to get somewhere around 3.5 million new paid subscribers. Instead, they got about 4.4 million new subscribers. So it was a huge beat. We're going to take a quick look at why or where that comes from. But for the Q4 of 2021, so for the next quarter, they expect about 16.1% year-over-year revenue growth. So, I mean, we can still see this is still strong growth, right? Still strong double-digit revenue growth year-over-year. But if we take a look compared to last year they were seeing low 20% year-over-year revenue growth. Now they're seeing mid-teen year-over-year revenue growth. So something to keep in mind of. Now let's go back into that kind of subscriber growth. They saw about 4.4 million subscriber growth this quarter. Most of it is actually coming from APAC region. That grew about 2.2 million. So more than half of total paid net adds came from that market. Europe, Middle East, and Africa were also a huge contributor of about 1.8 million subscribers. That was a huge growth compared to last quarter, where they only had 188,000 growth, right? And that's insane how they've just such improved sequential growth for this quarter. Strong impact due to the content that they are releasing. For Q4, they are forecasting about 8.5 million, and this is consistent to their Q4 of 2020, which they added around the same type of levels. And if we take a look right now, 2021 is still expected to be the worst year for Netflix. Obviously, 2020 was super strong, but we can see the back half of 2021, there was just huge growth. Look at that. Huge expansion in growth and what they expect for December of 2021. So overall, the first half of the year was a little bit slower, usually because of that kind of, they took a lot of the front load of subscribers last year in 2020, so they expected a little bit slower growth. That's exactly what happened, right? But now for the end of 2021, they're seeing stronger growth. I'm dealing with a lot of content. Do you want 10 free stock picks right now? Well, if you do, let's take a quick listen to today's sponsor, a great reason why I'm able to provide so much content to you guys for free. I want to thank The Motley Fool for sponsoring this video. Motley Fool is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. You all know how much I love researching new stocks and trying to find the next best investment. So I'm proud to partner with The Motley Fool to bring you 10 free stock picks from their popular product, Stock Advisor. Stock Advisor has beat the market by more than 4x. Go to fool.com/Jose to get your free 10 stock picks now. All right, the second thing I want to take a quick look at is Netflix is kind of changing a metric they used to use before to show the strength of their titles. Back then, they used to show users watching the title. Now they're kind of moving it into hours watched instead. And hours watched instead, they say, is a better indicator of how well show or content is performing. This is also a typical thing that the overall industry uses, so that's why they're moving on. One thing is total hours view show the actual hours view per users in the first 28 days on Netflix. The number of accounts that have watched at least 2 minutes of the title show number of accounts watched, and that's usually a bad indicator, right? Because someone could just be watching the first 2 minutes, maybe the first 5 minutes, maybe the first 10 minutes, and if they don't like the movie or the show, they can cancel out. But if they watched at least 2 minutes, it would have counted as number of accounts. But now if you see hours viewed, you can really see, hey, this is a show that a lot of people are watching. It also has a lot of rewatch and rewatch material that people can come back and replay the show. So it shows to be a strong content. So I do like this move that they're moving into a new metric. The third thing I want to take a quick look at was the acquisitions that they made and kind of the move that they're doing with future content. Obviously, right, we've seen Squid Game did super strong for Netflix. They saw a huge amount of subscriber growth. They're continuing to do new content as well. And the back half of this year, they're showing a lot new, stronger seasons coming out. But I do want to talk a little bit more about acquisitions instead. During Q3, they announced the agreement to acquire Roald Dahl Story Company. And this is still pending regulatory approval. But if it gets approved, they will get the intellectual property for shows like, for content like Charlie and the Chocolate Factory, Matilda, the big friendly giant, James and the Giant's Beach, Fantastic Mr. Fox, and the Twits, to just name a few, right? So this is pretty insane, especially for Netflix and for the streaming content world right now, where you need to have original content. So Netflix is doing that, and the more acquisitions like this, I do believe the stronger material they will have for their customers. The second thing is they did mention that they're going to start offering games. They did do games in select countries. I know they tested out in Poland, and it still remains in very, very early days. They plan to try different types of games in different countries and learn more about it and how their consumers like it. During Q3, they did acquire Night School Studio. This was the first game acquisition, and this is just to help build out their game development capabilities. So pretty interesting there. The final thing I want to take a quick look at was cash flow, right? Cash flow from this company. So they expect the full year of 2021 to be approximately break even in free cash flow. And the reason being is, right now, the back half, they're going to have a lot of expenses due to production cost. And also, so even though maybe the first few months and the first few quarters they were positive in free cash flow, they expect Q4 to be negative in free cash flow, and that negativity is going to break this free cash flow to kind of be break even, or maybe even negative for the full year of 2021. They do believe that for the full year of 2022 and beyond that, they will anticipate positive and free cash flow, which I think is super strong. Finally, they do mention that, hey, they repeated again that they no longer need to raise external financing to fund their day-to-day operations. And even though they're not right now, they're purchasing shares a little bit slower than normal. The reason being is they're using that money for better merger and acquisition activities instead. They want to continue to grow. If they have, and this is an idea I like. Again, I don't have Netflix in my portfolio, but this is something I like. If you can use that money to grow your company, to maybe grab some good players or improve the overall content, might as well use that instead of doing repurchase back. So overall, I think earnings were good. Obviously, some things to watch, right? I mean, the amount of free cash flow, they're still expected to be free cash flow negative right now. Subscriber growth is coming really strong in outside countries. Outside countries tend to have lower margins from time to time. And obviously competition, right? This is, even though earnings did show to be good, they beat expectations. Q4 is expected to be super strong. The stock price right now, even with all this perfection, the stock price is down 1.3%. And this is how the market works. Sometimes stocks are priced to perfection, and if they missed out a little bit, and I believe what happened is maybe they did, investors expected a little bit more growth beat in this quarter, which kind of dropped the price down a little bit. But regardless, Netflix seems to be a strong name still. And best of luck and congratulations to anybody that holds the stock. So take care, guys. Have a good night and see you next time.